Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good weekend all. Ira Epstein with your weekend version of your agriculture update for Friday, the 1st of December, 2017. We're about 3:50 p.m. Central Daylight Time. Now, don't go away because I'm going to be telling you about my charting course, and I'm also going to give you a special Christmas offer for it, okay? So you get both things. But let's take a look at what we have right here. If you take a look at the grains, you ended up today with a bit of a rally. Cotton still another day of a rally. Sugar falling back a bit. Energy prices strong as can be. I wish I could tell you why yesterday energies didn't get stronger. OPEC announced what they did, and it was like a delayed reaction. Slap me, baby. Oh, they did that? I'll go up today on the news. Pretty funny. We added a couple of more rigs today, 2 more oil rigs from what I could see, nothing major there. And if you're not telling me that there's some profit in here for most shale producers, I don't think you're being accurate. You know, you're just about $60 a barrel. If a man needs more than that, they're probably not a real shaler. That's the best way for me to phrase it. Now, for the weekend, you know that be it agriculture or any market, people are going to be talking about Mike Flynn and him going to court and testifying that he had lied to the FBI, and now he's going to be a witness for the prosecution against potentially, and I don't know if it'll come or not, the President of the United States and other that were on the Trump campaign. But we don't know what he said. We don't know if the President did anything wrong. And because he's an admitted liar, what can you say? Why, if he's lied about one thing, why is he not going to lie about something else? The marketplace saw a crack in the stock market that was big when that news came out. Then it had a chance to rethink on the big break. Gee, tax reform's happening. If anything happened with the president, Mike Pence is right behind him. Is that so bad? I think this all happened like instant. And I am not saying the president did something right or didn't. That's not the issue. I'm just telling you how the market, I think, viewed all this. The dollar did not get a bid on it. Metals did not hold the rally. You're down $9 from the high of where you were in the gold market. So, interesting day. In the soybean market, something's very evident. Take a look at how this market on the monthly chart has just been narrowing in the trading ranges. You can almost see the market, how it's forming a wedge. This is the seasonal time of year when you normally get a bounce. Because we're fighting so much with China, we're now after their aluminum and steel imports. Today we formally joined in the protest against them joining the WTO, World Trade Organization. We went on the side of our European allies on it in Japan. Who knows? But if we had a big grain purchase, you could come out of there. Is there more grain on the U.S. market coming in? I doubt it. So, interesting. Market's got two sides that I understand. To me, when I look at the weekly area chart of closes, I'm more impressed that the market has stayed over the weekly close because I say that gives the market an overall bias to the upside. When I go to the chart action, it has been nothing short of just getting whipsawed from many, many traders. How do I know? I'm in this building. If you go in the elevator, you can't help but miss the high-frequency traders, the guys on the trading floor, other brokers like me, you know, people talk. You have a lower low and a higher high. That's not what trends are made of. The market has done a good job of holding the 18-week moving average of closes, but it did get under it 2 weeks ago. It's staying over it right now. And if this market can keep moving out here, where might it go? Well, the next resistance point is 1009. So this market, because the bias is up, has the edge to the upside, and momentum is still pointing up. So I think that between the seasonals and the momentum, the bulls are still in control, and I won't change my opinion unless you close back under 958.5. In the meal market, you can see how the market, it did make a lower low right here from that low. Then it went and made the new highs, momentum's up, and it's fighting its battle at the what? This long-term sideways band of the Bollinger Band. This is a heck of a base or a top. You tell me which way it's going to turn out. The longer you go sideways like that, the bigger the eventual move out of that. And that could happen at any point, and when it does, it's going to be a son of a gun. I know our firm thinks that grains have a better shot at a pop to the upside than downside. It's interesting from the fundamental point of view that they write about. Soybean oil is the weak link in the crush spread, as we call it. Take a soybean, you crush it, get meal, oil. And to make a long story short, you got lower highs, lower lows. You're in a downtrend. The bias is down since you're under the 18-week average of closes, and momentum is down. You'd have to take out this week's high, which is 34.55, I think, to change that. And right now this market favors still the bears. In the corn market, you still have on the weekly charts lower highs, lower lows. The market went down this week, hit 335.5, just missed its lower Bollinger Band by about a half a cent, 3/4 of a cent, trying to turn up. If it can take out last week's high, let's call it just over 347, well, then it runs into a couple of layers of resistance. The first one's the 18-week average. The problem is, because you made the lower low this week than you did last week, you can't get the pattern like you have here of lower highs, lower lows. You can get a lower low, but a higher high. Momentum is pointing up. You've got bias pointing down. Market's fighting with itself. In the wheat market, lower highs, lower lows, momentum still pointing down. This is still very much a bear chart. Resistance, pretty solid at the 430.5 up to 437 level. If it could fall further, 402 3/4 could be the next number it goes to. It's 12 cents away, so that's possible. In the cocoa market, you broke down enough this week to get under this low of 2035 with the 2017 break low, so you end up with a higher high and a lower low. But more important to me is it's just sort of hanging at this 18-week moving average. Momentum is pointing the market down, and on the close, the bias turned down. I think the bears have control until the market can prove it can get over 22.36. I think there's a better shot of getting to the lower Bollinger Band because of momentum. In the sugar market, should this market take out 14.73, I think you got to be a little concerned. Until it does, it's in an uptrend. You've got higher lows. I like what I'm seeing right there. So, momentum, I don't consider it overbought or oversold. I consider it still looking okay. But the way the red line is arcing, the open on Sunday night should give us an idea of how that momentum really looks. I think this is an error in the coffee. It never hit 161, so they just have a wrong quote, so I'll pass that. That's not me. These are the, quote, vendors. In the cotton market, you've got higher lows, higher highs, bullish. You're at the upper Bollinger Band, and you generally don't stay over an upper Bollinger Band very long. You can see you hit it back here. You can see back here you did it, but the markets fell back. I'll say the same thing with this now. The market is in a seasonal uptrend. That's number one. The trend is clearly up. You've hit an upside target this week. Momentum's still there. I think the market on pullbacks will still probably find willing buyers. In the cattle market, something is happening. The market tried to come back this week, couldn't do it. Now, if it gets under 116.70, what takes place is you'll end up with lower highs, lower lows. But you're over the 18-week average of closes. So all I'm looking for at this point is if it breaks down, do you again start finding that 112.87 level is an important zone where the market rebuilds from one way or the other? Momentum is down, but the bias is up. So the bulls are in control. You'll say, why? Higher lows, higher highs. You still have to take out 116.7 to take that control from them. In the hog market, the market ended up on a bullish note. It's got now a pattern of higher lows, higher highs. It closed over the 18-week moving average of closes, and momentum is up. So until you take out this, what is that, 59.25 area? Let me just get to that. Yeah, 59.25. Still looks like you could make a run back to the 100-day average, which is acting as a resistance barrier at this point in time. Let's see what else we got. That's really it. So, in talking about my charting course, and I want to talk about it because it's so important. This course is done in videos, 6 hours of them. So you take your time and you're able to run through the videos in a way that I define run. Let me tell you how I believe in learning. You look at a video, I do one in a PowerPoint, one in a chart. You should be able to do the same thing I do, and if you're not, you go back, don't go to the next video. understand the concept. As you go through them, you're going to learn 5 different studies. That's it. It's not that hard to learn. You're going to learn how the swing line studies obviously work. I think they're so important because they define trend and risk associated with the trend. They do 2 things. Then they get filtered by moving averages. You're only seeing in these videos a couple of the averages. There's more that I use, and you'll learn about that. Then the momentum of slow stochastics. Okay, you're going to learn about that. Then the Bollinger Bands, an algorithm that gives you profit ranges. But there's another profit tool I don't even show you here. Window envelopes, and they're very, very powerful. A chart looks like this when you get done. You'll have your, in white, your Bollinger Bands. The red will be an 18-day average. There's other moving averages that'll be on there. Your swing line will be there. I didn't even show you the slow stochastics here. I don't want to get you with all of them on one, but they're all there. And as you work with them, you start realizing, hey, I've got a filter of all these numbers. You get my market research. It's a $60 a month value. It's included in the course. What about charting software so you can work with this? Well, we have 2 versions of our charting software. You're certainly welcome to use one of the versions for yourself. So what is the course? Right here. You're going to call us at 866-973-2077. You hear the Christmas bells? You can go to our website, www.iraepstein.com. You can click up here. Underneath it says, click here for Ira's course or free offers. One of the things I want to tell you, write the word down, XMAS. What is it? XMAS. That's what you're going to put in as your code, and that'll take the course from $109.95 down to $79.95. Enjoy it. I don't know how long I'll keep the special going. I wanted Black Fridays and all that to be gone, so now I get my chance when I'm not fighting with everything. Have yourself a great weekend. I'll see you on Monday.